Hello and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday the 2nd of April. We've got a fairly quiet start today, but yeah, I haven't been able to say that for, oh dear, ages really, many weeks really, that we haven't seen markets that have been settled into the European session and then remained settled. But look at this, equities very mildly higher. Don't know whether that's a good thing or not really. But certainly we see a little stability coming back into the market. Sterling reasonably strong. Interesting that the euro remains weak. The cost prospect and the discussion surrounding, in inverted commas, corona bonds and mutualisation of debt is going to be seems to be a bit of a millstone around the neck of the euro at the moment. That continues to fall away. Dollar slightly mixed on the day, nothing too decisive in terms of direction. Sort of do still have actually pretty decent performance through the commodity currencies, which are all higher today. And one of the reasons why is that we've got oil that's rebounded 10% today. Look at that rebound on oil, big move to the upside. Is this the end of the selling pressure? Question mark. As Donald Trump has announced that Russia and Saudi could be close to some sort of agreement on production levels. If that comes to fruition, then obviously that would be a positive for oil, which is facing a massive decline in oil demand this year. So the supply of the market remains a key issue. I mean, record EIA inventories yesterday were a real eye-opener into the fact that we have some real issues in the supply of oil at the market. If that chart ever comes through, that's annoying. Okay, I'll leave it there anyway. But what we have got at the moment is, there it is finally, since 2016. So what we have today is a mild risk positive look to markets, but I think the main reason could well be the fact that we're waiting for that weekly jobless claim number. Last week we saw 3.28 million jobless claims in the States. We're expecting another massive number today. That's the Reuters estimate, although you can see other wild different estimates on other sites, but Reuters are giving it at 3.5 million. And how the market responds to this number today, well, could be interesting because, as I said, a slight risk positive look to markets today, only mild though. But if we see a dramatic reaction to any really negative number, or negative surprise I should say, then we could see the renewal of the selling pressure lower. Look at the S&P 500, which fell away sharply yesterday. A little bit of a rebound, 1.5% on the futures today, but again, if it closes lower once more, we could start to see a renewal of this selling phase lower once more. So lots to consider still on those equity markets. Okay, so in terms of data today, as I said, weekly jobless claims is the first one out, 133.5 million jobless claims expected. That is a huge number. I can show you that. This chart here. I mean, what an incredible leap that was. As I said, the height of the 2008 crisis, 660,000, 3.28 million last week, and expected to be higher this week. So yeah, we've got that, and we've also got the US trade balance for international trade, 40 billion deficit there, and also factory orders at 3 o'clock, 0.2% for February. Remember, US wasn't in lockdown in February, it certainly is now. So that takes me on to my chart of the day, which today is the Canadian dollar, which has been highly volatile in recent weeks, and you can see, but here we go, look at this 21-day moving average. Really good basis of support that is. Comes in around 140.50 today. But what we've seen is that sharp move lower where the dollar corrected. We've seen the move regaining some impetus as oil fell away. Now oil has rebounded. Dollar CAD has started to fall back again. But it'll be interesting to see with that fall back if that's just seen as another chance to buy dollar CAD, because Well, unless oil goes on a dramatic, sustainable rally, it's difficult to see that the Canadian dollar is going to be benefiting in any sustainable way against the US dollar. So it'll be very interesting to see how the market reacts to this little improvement in the oil price. But as I said, we're seeing this run of higher lows on a daily basis on dollar CAD, and you can see a slight improvement here on the hourly chart as well. It just dropped back underneath 41.45, which, let's zoom out here, is a basis of a pivot. It's not to the pip and it's not 100% accurate, but it's an interesting gauge. So falling underneath that, initially you'd say, well, you want to get back above that now to really get the bull run back on track. But you'd still look at this daily chart and think, well, we've seen this repeatedly actually. We saw it on Tuesday and then a subsequent reaction higher on Wednesday. So market is responding, finding support around that 38.2% fib level. And as I said, that 21-day moving average. So this is around about the point at which you'd start to see support coming in for dollar CAD if it was going to continue that reaction run higher. So this is a key moment, I think, for how the market responds to dollar CAD, considering the improvement in the oil price. But as I said, 10% up on oil. You're not seeing massive outperformance of the Canadian dollar today. So question marks still surrounding how strong that market could well be. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars. And I've got a payrolls webinar that you can join tomorrow.